Hello guys, welcome back to yet another episode. So what we are looking into, this is lesson number 4, and for today's lesson I want us to get to introduce a new concept, and what we'll be looking into is something called the traders checklist. So this is Forex trading lesson 4. So as I said, what we'll be looking today, we are going to look into it's called Forex trader checklist. And what we mean by the Forex trader checklist, these are the things that they're very, very important. Every time before you get to execute any trade, it's important for you to get to take your time and you get to look into them in details, since they get to guarantee you higher possibility of really making or getting money from the market. So number one, let me just have a breakdown here. So what we'll be looking into in this checklist, we'll be looking into we start with basics. By basics is what we have already covered for lesson 1, lesson 2, and lesson 3. Under basics, we look at what Forex is in general, Forex trading in generally, that is. So under the basics, we also get to understand about pips, and that's what we have already looked into. What is pip and how to calculate the value of pips, as well as there's also another concept which we'll be looking into. It's called leverage. And with leverage, I'll be showing you how it's important for you to include to be very, very sensitive when it comes to leverage, since it gets to determine how much amount of money from your account you're exposing to risk, depending with the kind of the broker that you're using. So with leverage, I'll be introducing that concept as we get to move forward. So with the Forex trader checklist, we're talking about the basics, and under basics, this is what we have already covered so far for lesson 1, lesson 2, and lesson 3. So let's proceed to number 2. So under number 2, we have something called what we call the technical analysis. We have the technical analysis. Under technical analysis, there are new concepts that we'll be looking into, and they're very, very important to increase your probability of how much you can get to make, as well as how you can get to lower your risk when it comes to trading. Under technical analysis, we have things such as we have the chart pattern, we have candlestick patterns. We also have, apart from the candlestick, we have things such as we have the resistance and support zones. So these are just a few. We also have things such as we have the trend lines, the trend line. We also have things such as psychological levels. What else do we have? We have the candlestick. We also have things such as indicators. So all these, they get to fall under the technical analysis part of the trading strategy, and I'll be showing you as we get to move further. I'll be introducing each and every concept one by one to make sure that you have whatever it takes for you to understand how the market operates and to understand how you can get to start your career when it comes to trading, as well as they are very, very important for you when it comes to building your own trading edge or trading strategy. So we have basics. We also have the technical analysis. Let's look into number 2. So hopefully you have already captured that. So we have number 3 is where we talk of with the strategy. We talk of strategy, and by strategy is also called the edge. This is your trading style. This is your trading style. And by trading style is whereby from what we have, what we'll be looking into the technical analysis part of it, you get to come up with a few concepts that they really, really work well for you in the market, and you get to stick with that over and over till to the point whereby you get to master it to a point whereby if you can just get into the market, those concepts you can get to identify them quickly in the charts. So we have a strategy. It's also known as the edge. So number 4, we have something called backtesting. And with backtesting is whereby you get to take your time. For instance, over the weekend when the market is not on, you get to take your time, get to look back how the market formed for that week, how the candlesticks get to be printed, as well as the concept that you have been learning from the technical analysis. You get to try to apply them into the market, and then you get to see how things they get to turn out. So we have backtesting. Basically, this one is like revision, or just doing practice. Or you can also say it's called revision. With backtesting, it's very, very important since it gets to help you to understand which strategy is working, which strategy you can get to identify it into the market, and that's why we keep stressing about backtesting. And it's important you get to do the backtesting over a weekend when the market is not printing out or it's not active. So let's proceed into number 5. And with number 5, this is whereby we are talking about risk management. With the risk management, these are an area that we can't stress enough. But with poor risk management, even if you have a working strategy, you're going to blow up your account, or even you're going to lose money into the market, since wrong risk management leads to big losses. And with big losses, they come up, they bring messing up with your psychology, and you get to find yourself even doing some revenge trading, and with that, trust you me, you find yourself even gambling. So risk management is very, very important. And let's proceed to our last concept, which is number 6, and this is where we have your psychology. This is whereby psychology. Let me just psychology. So with the psychology, this is whereby that's why you find trading becomes very psychology. This is the hardest part, since with that strategy you can get to master strategy within 3-4 months. Risk management, you can as well master it with a few months. But when it comes to psychology, this is what takes years and years for you to master yourself, to understand yourself, of course, to be sensitive when it comes to emotional things and money-related issues. With the psychology, this might take even 3 to even 8 years for you to master yourself, and this one depends basically with an individual. This one is something which is not something that you can get to generally say it's going to take a specific time, since it's based on your personality and the person you are and your relation when it comes to money. So psychology, this is the place whereby so many people, they struggle for so long, and this is somewhere it's very, very hard for somebody to help an individual to master their psychology. It only takes time, it takes practice, and of course the point is, by the end of the day, if you get to keep putting in the work, it's going to show you, or it's going to reward you in the long run. So basically, that's what you need to know about the trading checklist. We are going to look into every one of them to make sure that you get to understand every concept, as well as so that you also get into the chart. I get to show you practically how all these things they get to come together. So that's for the case of our today's lesson. If you haven't hit the subscribe button, I don't know what you're waiting for. Just go ahead and make sure you do that. Turn on that notification bell, and of course, smash that like button for me, since it's very, very important with the YouTube algorithm. If you have any question, talk to me in the comment section, as well as go ahead, share the video with a friend. We also get to extend that helping hand to a friend who might be in need of this knowledge. So another thing though, I'll just request you is to just go ahead, practice, of course, and of course, if any concept is not clear, just talk to me, and of course, join our WhatsApp group. We have a group right there. You can get to join it so that you get to grow this audience each and every single day. So that's it for today, and of course, I'll be looking forward to seeing you in our next episode, of course, our next lesson number 5.